No. Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 180 for December 14th, 2021. We are broadcasting and recording this at 4 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today we will be discussing your trade ideas. So today I've arranged for Wally Olopade to join us, and you should be seeing his screen right now. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, welcome everybody. We had another big day. This one a little bit to the downside and getting very volatile out there. That VIX has gone from 14 up to 35, back to 18. Now it's at 22, 23. So it's definitely seatbelt time as far as volatility. Wally, a lot of people are aware of you already with right side trading, but for the people who are new to us, maybe you could introduce yourself and a little bit about what right side trading is doing.
Absolutely. Well, first of all, thank you for having me on. And I'll say, yeah, right side trading, we started this back in 2013, 2014, but really didn't start marketing it and really doing more of the public speeches and stuff like that until 2016. The short and sweet is that I did not like looking at stuff in hindsight. I wanted to be able to anticipate what's going to happen on the right side of the chart. And so hence the name right side trading. Long story short, we teach people how to look at data and use data to kind of anticipate what is going to take place going forward. And so that's pretty much what we do is, and we do more swing trade. We don't do day trading, we do more swing trade. So a typical trade will hold for a week to about 3 months is what we do. And yeah, that's what we do.
Yeah, you've had some great calls this year, particularly on that Tesla going up from like that 700 range all the way up to way over 1,000. So, you know, a lot of the stuff that you've been talking about has been very worthwhile to be aware of. So let's get into these ones for today and see if we can get on the right side of some different ones here. Sure. First one up is Amazn, AMZN. And what are you seeing there?
All right, so here is Amazn. This is the platform that we use to kind of help us see what's going on right now. Everything is end of day data, so we haven't had today's data just yet. But as you can see right here, yesterday, the way we use this platform is if you move the mouse over to the very last candle and look to the left-hand side and see what this right model says. Now, well, this right model, this is where we have all our quantitative and technical analysis all put together into one. And what we have it do is just calculate everything and says, what should we do? There's really about 4 things we want to know. 1, should we be buying? Should we be selling? Should we be placing a stop? Or should we be doing nothing? Is really what we want to do. So each and every day or each and every candle, whether it's daily, weekly, monthly, our goal is to figure out what should we do based on technical and quantitative data. And as of yesterday, what Amazn was showing us here is to sell short. Okay, so a couple of things is that first and foremost is you'll see the background color here, red and green. This just tells us whether we're bullish or bearish. So when this background turns red, we know that we're beginning to deal with a bearish situation. And you will see that 2 days ago, what it told us there was exit your long positions and place stops in your short positions. So 2 days ago, it told us exit long positions because something is not right with Amazn. And then yesterday it said, look, if you want to short Amazn, now will be the time to start shorting Amazn, okay? And then what we then see now is, wait, either one right now, based on just this daily chart, tells us, look, the direction that we need to be on is the bearish direction. Don't be bullish just yet. If and when, or should I say maybe when things turns around and it's ready to go back higher, we'll see that too as well and say, it's time to go higher. So for now, our biggest thing is we got to look at this support level, just like anybody else. We'll look at this support level, see what price does here by the end of the day. Other than that, we'll be waiting to see what price does at this support level. And then just see if 1, the background changes into green. That's what we want to see. And then 2, at that time, you'll want to see something like this, where it says 8 buy cover when we have a green background. Once that happens, then the expectation would be that we expect it to rally. But if you were to ask me today, what should we be doing with Amazn? I would say you do not want to be long in Amazn today.
I mean, first of all, that move up to 37, 3,800 is looking very much like a blow off. and it looks like a very important peak. And then if we do take out that low that we're looking at now, we could start accelerating to the downside.
That's correct. That's
And the
very
explanation of that might be that the holiday is not being joined. I mean, we're getting to be 10 days away from the holiday, and we are, if we're not going to get some retail boom, and FedEx and UPS isn't going to be delivering all this stuff along with Amazon, then it could be a different season. And maybe the fact that some of the delivery people are having dodgy times might be telling us that there is people anticipating that the holiday season may not be as robust.
So very good point. I really like that angle that you're coming from, because that is something that we have to be aware of. But I would give this caveat to that, and that is part of what we see is that up until literally like up to Christmas, because I remember 2018 to 2019, December 2018 to 2019, we saw market just keep on tanking until the day after Christmas, literally the day after Christmas, before the rally started. So I usually tell people, so look, we might have some choppiness and volatility, like you mentioned earlier today, which is what we've experienced. And let's see whether that continues to around Christmas time. If it doesn't improve by then, man, yes, this is it, it's over. But for now, what we're doing is we're still waiting and watching to see if we get that reversal that would take us higher before.
What is that green bar that's about 4 over? What's that high point price?
This right here?
No, over on the other side here. This one where we just had a little bit of a bounce in the, what's that number at the high right around there?
At the high there, that was
35.
Yeah, 35.46, 43.
Yeah, that really, I mean, if you wanted to have a crowd behind you, you might want to look at that number before coming in rather than hoping against hope that it's going to stop, right?
Very good point. So you're saying like once it clears that level.
Yeah, once it starts clearing that level, obviously something's occurring that must be positive. And then, of course, the technicians are going to say this thing's turning around. And then all of a sudden, all these people that have been interested in selling, they go home. So you don't have many sellers left because all of them from 3,700 to 3,300 did their selling.
Good.
And now you can get a situation of an imbalance where you got a lot of people short covering and you got a lot of people trying to come in. And then on the sell side, not much volume. So there you go.
Yeah, no, I totally agree with you on that.
So, I mean, if you're bullish, it might be a better buy, $150 higher than it is here. You know what I mean?
Yep.
Because, if you're buying it for any length of time, if you're looking for a $50 or $20 move, that doesn't matter. You know what I mean?
So that's a good point that you just made there too. Again, it depends on your goal. If you are someone like me who doesn't mind holding for a month, 2 months, 3 months, then yes, that you're going to approach this a little bit differently from someone like Sunny, who would probably trade this for like an hour or two, something like that. So yeah.
And these numbers that they're getting under right now, under this 3,400 area, 3,450 area, that's not a particularly good sign, huh?
So that's the key here. So to me, see these two sticks right here, these two wicks right here, this is usually a bottoming pattern. Okay. Yeah. And so when that occurs, it doesn't mean that price cannot dip below, but what you do not want to see is price close below this level.
Right.
I mean,
right.
If it closes, especially just those last to this green and red right there, anybody who understands candlesticks, this is called a tweezer bottom. Okay. And forgive my handwriting because I don't have the best handwriting right now. Tweezer bottoms are usually a bottoming signal saying that, even with volatility like we're seeing right there, well, we do not expect this price to close below that level. If it does, that tells me something bigger has gone wrong. Okay. But you will see price come here, maybe even stop some people out because most people have their stops down here. Maybe stop some people out, bounce back up, and then start reversing back to the upside. So that is an area that we're going to be watching. And if that happens, you'll be dealing with technical analysis called double bottom. Okay, so we'll be dealing with a double bottom here, which is very, possible for this to be a double bottom that reverses back higher and take this out and then even go to all-time highs. So we have to be aware of that, and that's something we're watching for and saying, look, our biggest thing is we do not want to see price close, not dip, but close below these two lines here.
Yeah, and we're getting to be about 10 days left of trading in the year. So in the next 10 days, there could be an opportunity in this stock that you could reap benefits on in January if, in fact, we're going to have that stampede of buying from the pension plans, et cetera, et cetera. So this is a very interesting time to keep an eye on this one because, it might be an interesting setup going into the new year.
Absolutely.
We didn't go over the S&P, and David likes to go over the basic general market, and we are, obviously getting tagged pretty good today. So, our view that we talked about yesterday on the broadcast was we could go down into the support zone of 45.75 S&P on the SPX, and
Okay.
also 4,600, which is essentially the neighborhood we're kind of testing now. Let's put up your graphs and say and see, I have some 5-year charts where the 12 SMA comes in around 45.75, and I noticed that's around where the 50-day moving average is. So somewhere between that neighborhood and the lows today. Do you see that as a support zone, or what do you think?
So very good. If anything, actually, let me bring this up because we don't have today's data yet, but I'll bring this up right here, which is Thinkorswim. What I actually see encourages me, because even though price came down here, you see this gap that the S&P created over here. I don't know if you can see that right there. This is a typical gap fill, so to speak. Okay. And to see that price did not stay down here and instead came back and bounced off of that, it's almost like I'm looking at this and saying, okay, excuse me, okay, this is a possibility that's what we needed to do. We just needed to fill that gap before things reverses back to the upside again. So again, I'll be at this stage where I'm saying, wow, if we get a green candle tomorrow or literally anytime this week, I would say we're ready for the market to go high. So here's where my zones would be. I would personally take this, the top of this candle here, and the low of this candle, and I'll form a range in that area right there and say, if price, whichever direction price breaks out of,
go with it.
Now and Friday is where we're going.
Yeah. I'm looking at my 1-year graph, my 12 SMAs at 46.25 ballpark, and we closed above that after going underneath it. That's a positive. And then your resistance zone, I've got moving averages in the 46.40, 46.50 range, which is pretty much in the neighborhood of your top area. So I think those parameters make a heck of a lot of sense. Maybe give it a little slippage of 25 points underneath 4,600, worst case.
Maybe.
And then basically after that, it better get on its horse, right?
Absolutely. And I will say again, a close above or below that.
Well, you've got the Fed meeting. If they come out and they go, listen, we're going to do tapering, but we're not abandoning you. And we're here all the time with our printing press. So please go out and buy some presents and relax. If that's basically the vibe from Powell tomorrow, then we're going to get back on the horse.
We're going to get back on the horse. Yeah. Exactly.
And the likelihood of him talking like that outweighs the likelihood of him saying, we're going to hike this thing like Volcker did in the early 80s, and we're going to choke this thing off like two hands around your neck.
That's not going to happen.
So in other words, that's
not going to happen.
Unless he's taking a Jekyll and Hyde pill. But he he is going to recognize the inflation rates, because he's got to get the monkeys off of Biden's back, because, every other commercial on TV is how bad things are and how high prices are, and how terrible things are, and everyone's house has gone up, everyone's job pays more, everyone's stock portfolio is going through the roof, unemployment's back to almost full level, and of course the world is terrible, right?
I know. I know. And you got to also question too, why did the price bounce right around that area? I mean, I mean, earlier today, market just seems like there was no hope, right?
Right.
Like nothing was going to, it just seemed like, okay, everything's going down the drain. And then here we are, we come out there, we fill this gap up, and then now it bounces back up again. So it's like, I always tell people, I say, is it possible that somebody knows what the outcome of tomorrow's Fed meeting is going to be? Okay.
Also, it's a liquidity thing. Whereas, the day before the meeting, or the day after Thanksgiving, or these other days, the volume and the activity is probably fairly thin, so you can push markets anywhere you want. But think about it, after January 1st, liquidity is going to go way up, because all those pension plans and all those people who go, I got to invest my money, and all those New Year's resolution crowd. And if they come in with huge buy volume, and we've been selling off going into that, or not going anywhere in a flat situation, it's going to set up a order imbalance for January that could be very exciting.
Very good. I love that. I love that angle that you're coming from. It's absolutely true. And I think that that's one of the things that people sometimes don't pay attention to. And it's like, you know what, it's not bad that the market drops in December because you're going to get a really good month of January. And so what I usually say is, okay, the longer it can take into the month of January to hit that low, the better, because then now we can capitalize on capturing some gains in December and run that all the way through into January. And so I think what you're saying is so on point. We could definitely see something like that.
I tell you, the other thing going into the new year is you got to get a little bit of realistic on your expectations, because Apple, for instance, I think is up 45% over the last 3 years and 65%. You know, I mean, basically it's gone from 1 trillion to 3 trillion in a little over 24 months. Now, obviously, you know, the likelihood of that pace continuing probably is not high. And so basically future gains next year, you know, unless you're a good stock picker, you know, it could be a little harder to come by.
So let me give a point against that. And I'll say, you know, Apple can actually do a whole lot better. And the reason why is if you look at this chart on the monthly chart of Apple, I always, you know, say everybody knows the definition of an uptrend is higher highs, higher lows, right?
Right.
Sometimes it could be going sideways and then go higher. When I look at this phase right here, I mean, this was Apple really going nowhere for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost a year.
Right.
Not going anywhere. Okay.
Right.
So the fact that it based itself, I mean, it went up, came down, went up, came down, went up, went sideways. Now it's beginning to go higher. I think at least the first 2, 3 quarters, first quarter or two of next year should not be that hard for Apple to continue going higher.
No,
Okay.
220 price or 210 price is probably not off the table. I'm just saying if you're expecting it to go to 300 and 400 and 500,
I see.
That's what I'm talking about. Yeah, I'm talking about, you know, the move from 100 to 200 is not going to be going from 200 to 400 unless they come out with the EV car or some other income stream that's going to be unbelievable. And of course, they got so many people hooked on this phone. If they could ever reload the entire batch, that would just be scary.
Good point.
Reloading the entire batch is starting to look a little bit like a Rocky 7. You know what I mean? Where people have seen whatever they needed out of Rocky, they got it, you know, in the first 5 movies, you know, whatever they needed out of the cell phone, they got in the first 10.
I got it out of the first 3 movies.
Yeah, you know what I mean? And so in Apple, you know, after the first 10 of them they made, maybe most people have gotten most of all they need out of it. You know what I mean?
True. But then don't you think that with the Apple car that they're trying to do, maybe that would, you know, getting involved in this whole car.
That's what I'm trying to say. If they open up something like that, I think that would be the more probable way that the thing goes nuts on the upside. But, you know, you can ask Ford and GM. The car company business is not the easiest and all the time. You know what I mean?
Oh, yeah.
It's certainly a lot more challenging than the cell phone. You know what I mean?
I agree.
But all right, let's get into these stocks. Keep going before we run out of time. Next one is Nvidia. Nvidia has been, I think, coming down a little bit lately. And again, that's probably part of that valuation compression that people are talking about a little bit.
Exactly. So again, based on our analysis, you know, something is wrong with Nvidia. Sell short is kind of like what we get in right here. Very interested in that we're now at the base of this pullback that we're seeing here. So to me, and especially with a sell short signal as of yesterday, this is not a good sign for Nvidia, is what I would say. We need to be careful about that. Potentially, you know, if the market, especially the overall market, gets worse, we could probably see something like that happen. You know, where
what do you think about using 272 area as a line in the sand if you're bullish? Because I've got a 5-year chart where the 12 SMA comes in at around 271, 272. So there's obviously a reason why it bounced off that number. The moving average might be one of them. But would you say if you're bull or you want to be bullish on it, that's not a terrible line in the sand, the lows there?
You know, that's not a bad idea because, again, somewhere around here is what you're saying, which is also where that gap was created, right? So one of the things we always say is you always got to expect the gap to either be filled or at least be touched, right?
Yeah.
And so
that come in around the 271 area where it went a little
that's
bit?
About 271, 272 area.
Yeah. So I don't think that's a bad thing because, again, you know, obviously the darn thing used to be 340. If you think it's a company that has no faults, which many people do, then obviously you want to take advantage of drops to pick some up, right?
Without a question. And again, I think once we get to this level here, it's it's imperative that we pay attention. Any type of bullishness that takes place in the market, and most people will probably want to wait until we kind of clear a whole level like this. But usually, when you're at support levels like we're seeing right now, all you really need is for the previous candle, no more than 2 candles prior, to be cleared.
Right.
Because usually, especially if you have 2 candles back to back that goes higher highs, chances are you're at the beginning of a new trend. Quite frankly, So
the only negative on this thing is obviously the valuation, and if they decide they don't want to pay as much for the dollar of earnings that they come out with, then obviously, even if it goes up, I mean, BABA and those companies are still making tons of money, but they lost 2/3 of their value. Why'd they lose 2/3 of their value if they're still profitable? Because they have changed the valuation metric.
Well, and also keep in mind with BABA, it's also what the Chinese government is trying to impose upon them too as well.
Which was the reason to compress the thing.
Gotcha.
Yeah, and their growth rates obviously have moderated as far as the nation is concerned. So there's a number of things, but certainly the valuation, the price to earnings or the price to sales or all that kind of stuff, compressing is not a helpful thing.
Yeah.
Well, where are we up next? We are on Merck. Everybody needs drugs, so let's go to Merck.
So I don't like Merck at all. I mean, from what I'm seeing here, Merck just seems like a stock that is just struggling at this stage. Okay. Yeah. Now, the good news is that, chances are it's trying to make a comeback because it's being beaten up so much. So the question is, should we try to jump into this or not? So I would say, okay, if the overall market reverses back up, I think this is one that would rise with the tide. So if the overall market bounces back up, chances are this would be a good time to get into Merck. All right.
Yeah, I mean, you got a lot of support around that 71 area, right? Going back quite a long time.
Yeah, you're absolutely right. If we go back like a whole year, you'll see that area is kind of like a what do you call it? Triple bottom, quadruple bottom. I don't know what you want to call it, but it's like this whole support area here.
No, and you made that low around 71, and then they came back down and only went to about 72. So they didn't take out the drop there. Yeah. And look at those. There's some gaps above that could get filled, maybe. Huh?
Very good. So if I was to look at this, okay, so a couple of things that kind of stand out to me. Let's ignore what happened up here and just say, this is the stock. This is what we call a bouncing stock. Just bounces up and down within this range, right? So at least if I was to target anything, $80, somewhere around 80, 70, 78, $80 is probably where I'll be focusing on as a short-term target on this one.
Yeah. And that's pretty much where the gap is. And, the way these drug companies go, one day they cure something, the next thing they give you something, you know what I mean? So they're very volatile on news. So
absolutely volatile on news. But again, it flips on the flip side of that too. If good news comes out, the market is doing well, then there's some good chunk of money you can make.
And you'd imagine there's a lot of shorts in there now.
Probably. Very good point.
Or liquidate, or anybody who wanted to get out of it certainly should be gone by now. So it's all about order flow, and obviously the selling has certainly been done. The question is can they get short covering and bargain hunters to come on in?
Exactly. And then if they squeeze, not that they would squeeze it, but just going with that notion of, okay, yes, the short sellers already done their job. Okay. Yeah. This thing has dropped pretty big. I mean, we're talking about from $90 to $70 to $20 drop on this thing. So it's a good discount there, right? That's about 28, almost 30% drop on this thing. So we've got a good discount. So anybody who's looking for bargain shopping on Merck, I mean, it doesn't get better than something like this. So
yeah, the two of them that everybody seems to be putting their money into is Pfizer, PFE.
Yep.
Pfizer and their buddy BNTX.
BNTX. Oh, that's interesting.
Yeah, they're not doing quite as well as the Pfizer, but
gotcha. Yeah,
they're the ones that have been behind the most popular drug.
Yeah, I've heard about BNTX. Never really traded that one, but interesting.
Yeah. Well, next one up on their list is Palantir, which really fell out of the popularity contest with a bad showing. It looked like it was a good thing going on at 28.30, and looked like everybody was into it. Yeah. And then the next thing is, it looks like it did something that made everybody say, "Get out of my house."
So Palantir falls under the category of what we consider to be IPO stocks. Okay, like they haven't been in business for too long.
Right.
If anything, have they even been, I don't think they've been in business for even 3 years yet, if I'm not mistaken. Yeah. They're not even
They've
2 years.
well, the company's been around since 2003, but yeah, their IPO was just last September, I think.
Yeah.
Correct. Yeah.
Yep.
And they have a lot of government contracts and they are big on data. So those things all sounded good. That's why 25 to 30 looked like a good deal. But obviously something occurred because this thing's been getting hit. Yeah.
Yeah, and from the looks of this, and this is very typical. We teach this in our IPO course. One of the things that you'll find is most IPOs, no matter how good they sound in the beginning, they'll do well for about a few months, and then they either go flat or go down. And we call that, like, they have to go through what we call the testing phase to see whether or not they're really going to make it. Okay, and when they go through that phase, it's usually a bad time. Some of them can go all the way back down to where they actually began from. And from what I'm seeing here, this candle right here, this red candle right here, it's a candlestick that usually appears right before a major drop occurs. Okay. And the fact that I'm seeing this now on Palantir, and we are kind of getting that follow through, I will not be surprised that, the skies are not going to be sunny anytime soon for them.
Yeah. This would be something you'd want to have do like Missouri, the show me state, show me some positive weeks and months, and then I'll join your party. But
and then I'll join your party.
Yeah, but not be the first guy there. That's for sure.
You definitely don't want to be the first guy to that party, and you don't want to catch this falling knife here. So I would totally agree with you. To me, I would need to see at least 2 green candles back to back before I even worry about jumping into it. Now, the risk we run into on waiting on that is, what if those green candle back to back are huge green candles like this, right? So at that stage, I said, look, it's just one of those things where you have to pick and choose your poison. You either catch a falling knife and get deeper cut, or you wait for things to prove itself. And I'm more in the camp of prove me wrong than let me catch a falling knife.
Yeah. Well, this next one is supposed to be a great business, CRWD, again, because of cybersecurity and stuff like that. But it's done a nice job of losing 35% of its value here.
Yeah, we were liking this stock actually not too long ago, because we were talking about how cybersecurity, because of all the stuff that was going on with all these hacking and stuff like that, that these cybersecurity companies would do pretty well. And it was doing quite fine. But again, whatever caused this to happen, I'm not really sure. I haven't been following it recently. But like everything else that I've been trying to tell people, yes, we've been having the market fall, but look at where they've fallen into, major support areas that we should be paying attention to.
Yeah.
Okay. So if I come over here and I do something like this would be something where, again, I'll say, wow, okay, thank you for giving us this discount. Now, can we get a reversal? And I truly believe part of that is going to occur either sometime in December when the overall market is ready to rally higher, or early January. Okay, so if you're patient enough to wait for this, I would like to see that level get taken out. Chances are, if that gets taken out, then we can expect things to go higher.
Yeah, a guy who been around the block a few times, Harry Boxer, he likes this kind of formation sometimes where you get a low point here at 188, you jump up to 213, then you pull back about 60% down to about 198 or 195, and then the next leg up should be the one that's powerful. So if you were kind of trying to get on this thing, you might take a shot and then put the stop underneath that recent low of 192. And if you take out 213, then you might be onto something.
I love it. I love it. I mean, so the only difference I would have made I would say, because I'm more patient, I would say this 2 levels right here.
Yeah.
Which is essentially what you're saying too as well.
Yeah.
It's just that I said, okay, let's wait. I said, because it's one of those two. One of these two are going to be validated. We're either going to validate this level or we're going to validate this level down here. And whichever one gets validated, then I know that's where we're going. Either way, if we get validated up here, there's still plenty of room to make some decent money from $220 to about $300. Okay, I'm okay. I'm not in a rush to say, oh, I have to get the absolute bottom. But at the same time,
Harry, I think deals with a lot of traders who are looking to get in, at precise times or something. You know what I mean?
gotcha.
Whereas when we're talking, sometimes we're just talking about being on the right side of a decent sized move.
Exactly. God
Not
bless you.
necessarily looking for the trophy that says I bought the bottom or something like that.
God bless you. I love it. I love it. That's what I tell people. I said, look, it's not about whether we got the absolute bottom, but are you on the right side of it?
Yeah. And you want the odds to be on your side. And obviously the numbers you're talking about, the odds would be increasing that you're on the right side once it can do what you're talking about.
Yep. Without a question.
Well, this next one is very interesting because it dipped underneath some of its moving averages as Applied Materials, AMAT. And it looks to me, if it can get above this 140, well, let's actually call it, stay above this 148, 149, 150 area. It could go someplace. What do you think about this thing?
So the only thing I'll say is, again, support and resistance doesn't have to be too complicated. We do something like this.
Yeah.
And voila. I mean, anybody who understands support and resistance can see, wait a second, you have no choice but to try to take advantage of what's about to happen here. Okay.
Yeah.
Excuse me. And this candlestick is a bottoming pattern. It's the exact same one that we saw on the S&P 500 on Monday that told us, yes, this market is going higher. Okay. So usually when this candlestick appears, it's usually a chance that market is ready, or the stock is ready to reverse and go higher. So if this is resistance right here, right? Now we have support here, and here we are. We're still in that support zone, getting ready to shoot it back up.
This next one, Fortinet, is another one that had a nice big pullback from 360 ballpark down to 280. And now it seems to be trying to rebound. If the Fed is not that aggressive with their talking, the stuff that got nailed because of higher valuations or fears that the tightening will be much more aggressive and quick, they could be the ones that bounce back because of a relief rally.
So yeah, so again, I like switching back and forth between different time frames and stuff like that. So just even looking at this right now, first thing I did was just like, okay, I saw this big gap. First thing that occurred to me was like, is this earnings or something like that? Sounds like, well, it doesn't really matter, but just good to know. The second thing is just let me see what's going on the monthly charts. Anything major? Nothing really there on the monthly chart. So then I said, okay, let's go to the weekly chart and see what's going on here. And now I'm beginning to see something where it's like, look, again, this pattern right here is one of those that occurs right before market goes higher. That's the same one that occurred right here. So this right here, this candle here is the same as this. And usually when that occurs, chances are it's going to go higher. This is the same candle that we see here that took this higher. Okay. So because this is a weekly chart, and yes, today is what, Tuesday? So we still got 3 more days. And so I'm almost beginning to look at it and say, wow, there's a reason why a lot of these stocks are stopping at this support level. We've seen a lot of them just halt at these support levels. And granted, it's because they probably waiting to see what the Fed's going to say tomorrow. But like you said, if it becomes out to be positive where this shoots the markets up higher, what you then find is this red candle that we're seeing right now is going to probably turn into a green candle that is going to take these things higher. And you'll probably see that amongst a lot of stuff. So I would definitely say pay attention tomorrow. So this is this type of times where come tomorrow, I don't care for what the announcement exactly is. It doesn't really matter. What I want to know is what the reaction of the market is after that announcement comes out. Okay. And especially towards the close. So usually this would be where we'll sit back the last 30 minutes of the day and want to see, is the market rallying higher or lower? If it rallies higher, chances are these are getting ready to kick up to the upside.
Yeah. A lot of these stocks are really in the same ballpark. They either have been nailed and people who are putting them up are hoping that there's a low down here, or they're in a downtrend that you're hoping for a bear market rally in.
Absolutely.
So I haven't seen a whole lot that look like they're going in an uptrend and ready to take off further. You know what I mean?
So,
So again, sometimes when you're in the wrong stocks and they're going down all the time, sometimes it's better to, try to get out of those and get into the better stocks.
absolutely.
Yeah. Let's go to DADA, DADA, and we'll see that this is another one in that group where it's been the ever shrinking violet here. And somebody is hoping that it's making some kind of a low down here.
Yeah, see,
And I guess the only thing you could say positive is it made a low, it came up, it came down, didn't take out that low. So if you wanted to play defend the former low, that's about the only game to play on that, right?
so here's where, to me, again, I've seen this way too many times. Okay, I used to go around back in the day calling myself the IPO expert because we studied how a lot of these IPOs go through the same phase right here. I mean,
Yeah.
this is that same phase, no different from what we saw. Who was it that we Palantir? It's
Yeah,
the same
yeah,
exact
yeah.
thing. They have
Yeah.
this rally. Everybody gets excited. For a few months. I would
Insider
tell them,
sell probably.
exactly, man. I'm telling you. You should be on CNBC. Warning these people, man. It's like this happens almost 95% of the time. This happens. Okay,
Yeah.
and so I tell people, I say, look. At the end of the day, once this happens, I personally don't want anything to do with it. Pure and simple. Okay. I just don't, because they have to prove to me that they're ready to start reversing back up again before I even want to do anything with them. Okay. Because some of them would actually go like this until they go out of business.
Right.
I mean, I can show you many companies like Groupon, FireEye, GoPro. They all went through the same process, and it's like you don't want to be hanging on to companies that are never going to do anything. So
there's a strategy called shorting against the box. And basically it's where you're long in a type 2 account and you short the stock in a type 3. And I'm not certain or uncertain. I'm not exactly clear if people that have stock that are, unencumbered by a time level can do that strategy or not. But it might explain if you can do it, shorting against the box. I would imagine insiders take the advantage of that tactic, and then they deliver their stock after their holding period is released.
It's over. Yeah. Which
At
is a
any
very
rate,
good point too. When the holding period is over, I mean, it's up
but
for
I don't
anything.
think a lot of these guys just watch the thing go down like that. You know what I mean? Without doing something, either buying a put or I don't know what they're allowed or not allowed to do. But it would be surprising to me if the owners of this stuff let the stock go from 60 down to 15, waiting for their time to come.
It'd be crazy.
CHWY, CHWY.
Yeah, let's look at
Used to
this.
be this is the pet place, right?
That's correct. And
everybody's in love with their pets for a long time. Are they still? Well, not as much. They must have got rid of their pets because it went from 115 down to. This is a valuation story again, huh?
Interesting. Yeah. So earlier this year or last year, something like that, we were watching these and saying the pet stores are doing really, really well. But now, I'm not sure what's going on. But if we just look at this weekly chart that we're looking at, this is a classic downtrend. Lower highs and lower lows, right?
Yeah.
And we just formed another lower low. So what does that mean? Chances are we'll probably kick back up again.
Yeah.
But to me, I would still consider it a short-term move until we can break this uptrend over here. So could we get a bounce back up here? Possible. But again, I would like to see at least two green candles back to back. We had one, and this one is still in formation because we're still looking at the rest of the week. Okay, so if by the end of this week, so let's put it this way, by next week, if this ends as a green candle and next week is another green candle, then I'll say anybody who wants, for the short term at least, be expecting this to go somewhere to this level, maybe no more than 80. I would say maybe shoot for 70, call it a day.
Yeah. Well, the next guy, Papa John, PZZA, obviously had a big time because everybody was ordering in. And obviously they're still ordering in with the football season going on. So this is one where the trend is up and it looks fairly reasonable. I don't know what the PE on this thing is, but it seems to be clearly stair step to the upside a lot, don't you think?
Yeah, it looks good. These are the type that we like to, not only because my kids love pizza, they eat this every Friday night since they were like 2 years old. But again, I mean, the chart, like you said, is in an uptrend. We've put in a double bottom over here, so that's good. I'm okay with the fact that it pulled back. To me, that's not a big deal. It's kind of like one of those things that you mentioned earlier. We'll have come up, come down, go up. Yeah. On Papa John's, the right side to be on will be the bullish side.
Yeah. And pretty clear you wanted above the 125 number and above the basically 120 number. So you got two reasonable lines in the sand there too.
Mm-hmm.
You know,
Well, you said 125 right
the
here.
ballpark figure 125,
Yes.
ballpark figure 120. You know.
Okay.
Yeah.
Yeah, somewhere around here.
Yeah, somewhere
I'm
in
okay
that
with that.
neighborhood.
Yep,
You know,
I'm
those are the two neighborhoods you'd like to have it hold if you're going to stay bullish. If you're, especially on, if you're keeping it on a shorter leash.
Correct. I like that.
Let's go to HYLN, not one that I'm familiar with. Until I see the company, maybe I am. Nope, I'm not familiar with HYLN Holdings Corp.
Does that have anything to do with these electric company vehicles or something like
It has
that?
something to do with $21 going down to $6. I know it has something to do with that.
Oh man, actually it was more than $21. It was $60 down to $6.
Oh, really? I'm just looking at the last year. Anyway,
Yeah.
whatever they're doing, it's the ice cube in the desert shrinking every day here a little bit.
Yeah, I'm not interested in something like
Yeah.
this. I would not
Again,
want
the person who probably put it up is hoping that that low that came in here at about 563 will hold. And basically it's going to pop above this. I got a 12 SMA at around 631, 24 SMA 677, and then 725 for the 36. So if it can clear those hurdles, it would become more interesting. But right now, the only thing you'd be doing if you were gambling is using that low as a line in the sand, that recent low.
So to me, I mean, this would not be. I mean, this is just a classic lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. It's just a classic bearish stock. I mean, I would not want anything to do with this. Now, what would make me say, okay, maybe things are turned around for this would be at least take out the previous swing low. Take that out at least. It proved to me again that you really are trying to take this higher. Take out the previous swing low, swing high. I'm sorry. Take out the swing high. Then maybe we can talk. Until then, I was like, I won't want to leave my money in a stock like this.
Yeah. Like I say, I'm not an expert at it. If they have some product coming down the pike that's on the verge of breaking, when you buy a stock, and I've always believed this, if you buy a stock under $10, you're really buying a call option that doesn't expire.
Oh,
because
I like
I've done this. I did it on free. I did it on a Freeport McMoran. It got down to $8. I said, listen, Freeport McMoran does copper. Copper's not going out of business. I'll take my shot here, leave it alone. And I'd never gotten rid of it. And then
FCX, is that the one you mentioning?
Yeah. In other words, you see it was down at $7.50, $8.
Yeah.
And I said to myself, these guys make copper. They don't make paper airplanes, and how are you going to do plumbing and electrical without copper and electrical vehicles? So, I mean, how the heck is this thing going to zero? Same thing with Occidental Petroleum. They had bonds that were paying 35% yield during the big crash when it went down to 10. Yeah, they had bonds 10 years out, non-callable, paying 35%. Now, obviously, if they went out of business, you'd lose everything because they'd default on the bonds. But if your bet was oil would bounce back and Oxy would not go out of business, now you get a 35% yield on your money for the next 10 years, non-callable. That was one of the great deals of the whole drop. You put 100 grand in there. Every 100 grand you put in, you got 35 grand coming in from Oxy for the next 10 years. That's not such a terrible thing.
Oh yeah. Now I never thought about it that way. If you are buying stocks under $10, you're buying a call option that never expires.
Well, like I say, that's what they are. You can't lose more than 6 on this thing.
Yeah.
And you know what? If they have anything going with them, you got to assume at some point they'll pop. But you can hold on to them for a long time if you view it as a $6 throw into the street, which is when you're buying calls. That's what it is, right?
Yeah, I like it.
It's $6 you're willing to throw into the street. All right, this next one I think is interesting, XLY, because this is a fundamental thing. You're going to tell us about the technicals, but on the fundamentals, the consumer obviously has got a lot of cash to spend, and obviously retail sales will come out and probably show that they are spending. But when these bottlenecks undo, which they're in the process of doing, and you've got these people who've double ordered, And now all these supply starts hitting them because the bottleneck is done and the double ordering is coming in. They may have to discount things at Target, at Walmart, at Ross, at everywhere, because the supplies are now in, and the consumer may have bought a lot of stuff that they don't need to replace right away. And so you could have a situation where the bottlenecks create a significant supply, and their double ordering creates a supply. And if this consumer can't, it doesn't come in and buy it, then they have to discount it to get rid of it, right? And if they have to discount it, if retailers, have to, or consumer discretionary, if they have to discount things, then that might be why the consumer discretionary would be vulnerable.
I like that thesis. Very, very sound. And, you can even see like there's beginning to be weakness up here. The question is, like you said, whether or not that's going to be what causes this to like really tank down lower.
Yeah, and it might not happen tomorrow. It could be a
Sure.
second half of next year's story, but the
Exactly.
those people in the harbor are not going to live there forever.
Yeah.
Ultimately, they're going in, and people are going to take that stuff off the boats and deliver it somewhere.
Yeah. The weaknesses is there already from a technical point of view. I mean, this is usually some type of a topping pattern. The question, like you said, is how bad is it going to get? And so again, if you were to tell me, oh, should we be buying this right now? Well, my suggestion would be you might want to hold off on the buying because there's too much weakness that could cause us to dip even further down.
Yeah, and like I say, it could be something that on a longer term basis, could be well, you're even seeing consumer staples and some of the more, lower PE stuff, less racy stuff, has been quite a bit firmer. I mean, that's where people are storing their money now. They're not going into the riskiest. Well, that's why all those stocks we've been looking at are in the tank, because those are high PE stocks. People don't want those right now, and they're not particularly interested in consumer discretionaries, but they are interested in stuff that has low PEs, where you're going to go and buy healthcare no matter what the market's doing. You're going to buy stuff from the store, like laundry detergent,
toothpaste and all that stuff. Yeah.
And that's what they're kind of saying right now. The next one, what's the symbol on the next one?
Boot.
BOOT or
BOOT, like Boot Barn.
Oh, Boot Barn. Yeah. Very interesting. Now, I'm not sure what drop this. When you see big drops like this, chances are it has to do with earnings. Do you know if it was earnings or not? Let me double check that. Not certain, but it might have just had to do with the XLY tanking. This has to do with the consumer spending, and maybe, like I say, this holiday season, they are not. Well, of course, this thing got very overbought too, so this could just be a garden variety correction.
Yeah. So here's what I'll say. I mean, again, I don't know what the news is, so this is one of those few times where I was like, what caused that? Because that's a big candle, Yeah. So usually when a big candle like that happens, you want to know, is it like some kind of scandal going on with the CEO stepped down? Oh, what's going on that caused that big drop? Because that could play an effect on that. Barring any major news that could spell potential danger for this, then I would say, okay, we have a pattern that shows that if we can get another green candle tomorrow, it was a fluke that is ready to go back higher again.
Yeah. Today's low is a very nice place to kind of keep an eye on. This 118 area, you certainly would like it to hold. Excuse me. I'm sorry. The low from Monday, 111.50. That is, it's hitting 12 SMA on my 5-year graph right there. Okay. So there is a reason why it's similar to that other one that I mentioned that had a 12 SMA and the market bounced off of it.
Okay.
So 111.50, you certainly would like it to stay above there. And then like 118, 119, don't you think staying above there would be a nice thing as well?
Yeah, so I would say definitely from analysis point of view, see this candle right here, that's the same similar thing right here. This right here is the same thing as this. Okay,
there you go.
So what you want, and actually here's another one right here, but this one failed. So that's why I say you want to see where you have the green candle and then another green candle that closes higher. In this case,
so tomorrow's a big day for Boot Barn.
Excellent. You got it. I
Yeah.
will be watching for tomorrow. Especially if it closes above this high,
You got a green light.
you got a green light.
Yeah. All right. What about ATVI? Activision. Blizzard.
Yeah, this thing is singing a whole different tune. Yikes. Okay, well, I mean, these are one of those where I'm gonna say you're gonna have to prove to me that you're ready to go higher.
This is the definition of catching a falling knife.
This
You
is
ever heard
the-
that
this is
phrase,
the
ladies
image.
and gentlemen? You ever heard of catch a falling knife? There you go.
This is the image of catching a falling knife. So
So anyway, the question is are they tired of beating up this thing and they're going to call the dogs off? And it looks like from the green bars there, somebody could make a case for that, I guess. Huh?
So my hesitation again is down, up, down, up, down. Okay, so I know this is a long ways to go, but that's when I'll be like absolutely confident, 100%. Yes, we're dealing with something. So I would like to see some development take place. Maybe it does something like this to kind of, but at this stage it's too early. I won't buy this personally. It's just not something I would do.
Yeah. This would be more like if you were a trader, you might say, hey, listen, we had the bottom made at 56. We rallied to 60. We came back down, didn't take out 56. So if we take out 60, you throw your hat in the ring.
Exactly. Yeah. And unfortunately, I don't trade that way.
No, that's an aggressive trade. Yeah.
That is aggressive and it's okay for some people. There's nothing wrong with that. It's not my.
Yeah, no. Like I say, that's what makes a sandwich, many ingredients. Right? How about keys? You know, this
you use and on the metaphors that you use. That's
exactly.
Cool.
Yeah. Well, on the keys, this was a company I've always loved, and supposedly it's got a great story behind it. I loved it at 157 when it was going up, and then it came back and gave me another bite at 160, and then it got right back on the bicycle again.
Nice.
And but now it's coming down from 205 to 195 area, but this could be a neighborhood where it might be worthwhile. What do you think?
I mean, it's had a really good run.
Yeah.
Really good run from the 160, 155 area that you talked about. I would prefer to see something more of a pullback before I want to jump in. So
like a 185-ish, yeah.
Yes,
yeah.
There you go. You read my mind. So if it can come down to this area, I'll be more inclined to buy. Other than that, I'll say, look, I missed the boat on this one.
Yeah.
I'll wait till I see another better setup.
Yeah. Yeah, they really talk highly of it as far as being an essential part of a lot of new technology. And so ergo, you know, you've seen a lot of other higher multiple things, you know, come down sharply. This hasn't really been one of them. So it might be kind of telling us that it's cut from a different cloth, whereas it may be more highly evaluated, but the people are real confident that they're going to grow into that valuation.
And there's nothing wrong with that.
Yeah.
It's a good company. I mean, just from the technicals, the sound and everything, again, it's just one of those things. It's like, don't chase a stock.
Yeah.
Right? That's all I'm saying. It's not that you can't even get in, but don't chase the stock. So let's see if it can give us a decent.
And it gives you opportunities. It was at 160 and it came down to 130. And then it was way up at 180 and it came down to 160.
160.
So since we're about 200, coming back down to 185 is certainly not off the radar. That's the rhythm. That's the rhythm of this thing. You know.
There you go. There you go. So that's more of what I would be willing to wait for. And you find something like that, you better pounce on that, because next time you see it, it's probably going. And that's the beauty of this, because like even when it came down here. When it went back up, it went way above what the previous high was. Same thing right here when it came down here. And then once it crossed above, we're talking about some pretty decent move to the upside. So
yeah, there's a reason why people are making money on this is the prices are rising. Yeah. So let's get into, we've seen a lot of falling knives this afternoon. How about a couple of Wally picks here so we can go away with a better taste in our mouth on some of these things?
So right now, quite frankly, a couple of stocks that we are beginning to look into is we want financial stocks. We've been waiting for financial stocks to do something here. So we haven't got a buy signal just yet, but we're waiting for that buy signal. And part of that reason is because we know financial stocks tend to move November, December for the seasonal rally that ends out the year. So we are waiting for this, and we love where it's sitting right now. Hasn't given us the buy signal yet, but again, based on what we saw here today, we just need one more green candle You know, that's really all we're looking for. Just one more green candle, and preferably if it can close above the high of today's price, then that would tell me, you know, Bank of America, some of these other financial stocks are ready to do something. So, and the good thing is they would typically rally to middle of January, maybe even end of January. You know, we did this every single
I got a
year.
lot of support on this around 42, 43, and you can see, so it's pretty tight to where you are as far as, you know, the risk reward.
Yeah.
You know, you're risking a couple of bucks, and if you're right, it could go up to, it could make new highs for all you know.
Absolutely. And again, the idea here is, you know, for the last 10 years, sometime around December, November, December, you can expect this to happen. Okay.
Yeah.
So this is
Do you have anything in addition to the B of A?
Honestly, not yet,
Okay.
because we're just waiting for what's going to happen tomorrow, see where the market is going to go, and then after that, is that what stocks are giving us something to pay attention to.
Yeah, we are going through a phase of chop, and trading a whole bunch during chop can be damaging to your health. So the bottom line is if you wait for the chop to get resolved, and we're going into the January effect, you know, you don't have to be the first guy into anything, because if the January effect does its job and we go into a stampede of high buying volume into not much selling volume, then there's plenty of real estate on the upside, right?
Absolutely.
Yeah,
I agree with you. Oh,
yeah.
One other thing that I know we saw recently was real estate. Some of these, that was something I think, I wonder what's going on there. Like Visa Home is one that we started seeing where showing some signs. I mean, it dropped pretty good yesterday and today, but this move that started this right here, especially coming off of this base right here, tells me what's going on in these sectors that we need to be aware of. You know, Lennard Homes is another one that, again, they've been coming off of this lows, and granted yesterday market was down, it fell down with it too as well. But I wouldn't be surprised if something is happening in the real estate market that people
XLRE is a nice little ETF for that too.
That's correct. And so,
you know, again, the stuff that's above its moving averages and rising, that's always a nicer movie to watch than the others, you know?
Yeah. So we haven't bought any of them yet either,
Yeah.
because again, we're into tomorrow, see what happens with the Feds, and then we'll see what the market tells us to do at that time.
Well, this is a good time for you to let people know how they can get a hold of you, and then they can get a little more information on your focus list and also your process that they could obviously use on their own on other stocks as well. So how can people get a hold of you, Wal, and get more information on what you're focused on going into this new year?
Exactly. So again, this is our website, rightside.trading.com. If you go over there, you go to where it says the Right Side platform. If you're a member, you can sign up there. What it is every Monday night we get together and we use the platform. We look at stocks, just exactly what we did today. What are some stocks to pay attention to? And then we come in there, and we don't call it a trading room. We call it an analysis room, because that's kind of like what we did today. Even today, we just analyze stock. We didn't trade anything, but we just analyze. So we have an analysis room rather than a trading room. Because we meet every Monday night at 8 p.m. and we just kind of like look at stocks. Which ones are the ones to pay attention to? We look at sectors. We look at ETFs. We look at industries to pay attention to, and then what stocks in those sectors and industries should we focus on. And then once we get into those, then those who have the platform can then use them to kind of guide them along the way.
Yeah, and these people who go into these trading rooms where it can diminish into abject gambling, you know, they might want to go into a room that's not quite as hyper about buying and selling every 5 seconds, and maybe get a little bit more of a macro view on things.
Macro, I love that. Thank you so much for saying that, because that's one of the things. If you notice, even what I was doing, first thing we always do is go to the monthly chart. What's the macro view? Then we come to the weekly, and then we analyze the daily. It's what we do on every single chart.
All right, great to have you again. Wally, hopefully we'll do this again soon. As far as what we got going, optionprofessor.com, OPTION professor.com. You go to that website and we give a weekly update on all the different markets and also our focus list. So bottom line is go check it out. It's free of charge at optionprofessor.com. Just shoot your email in there. Okay, we're going back to David, and thanks a lot everybody for being here, and we'll be back at you next time. Okay, thanks.
Thank you, guys.
All right, thanks, guys. Great show. So a lot of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or your favorite podcast app, or you can also just go to TimingResearch.com to get access to to this episode as soon as I can get it posted, or any of the past episodes as well. And just want to thank my guests again for today, Wally Olopade of RightSideTrading.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
All right. Have a nice one, David.